Hi, my name's Ed Merriman, and for going on 15 years, I've proudly been serving Maryland residents with their home financing needs. This week, we're going to continue looking at one of the major components of getting a mortgage, your credit score. Last week, we looked at the minimal Fico scores that were necessary for qualifying for a mortgage under the FHA, VA, USDA, and conventional loan programs. If you missed it, go back and take a look. It's informative and good. This week, we're going to look at how to get your credit score higher and what the mortgage underwriters, whether a person or an automated program, are looking for so that we can take advantage of the best interest rates the market has to offer. On the side, just as I stressed last week, there's a very large gap between qualifying for a loan and getting the best interest rates that are available at the time. To get the best offering, you need to be prepared before you apply for your mortgage. The difference can run into the hundreds of thousands of dollars in interest over the course of a standard 30-year mortgage. So for this discussion, we're going to look at getting your score as high as possible before you apply for a mortgage. How high is that? For your credit score under Fannie Mae's conventional loan guidelines, Fannie Mae's being the ones that give you the best interest rates, and the interest rates that are advertised, frankly, that will be getting your middle credit score over a 740. Above that, it doesn't really impact your loan's interest rate, and there's no pricing adjustment for it. How can you get your FICO score to the 740 mark? Number one, the most important factor in your score is making sure that you pay your monthly bills on time. This is part of your credit score history and the accounts that report to them, and it has about a 40% impact on what your score might be. Having a creditor report that you were late on a payment has a huge impact on bringing your scores down. So make sure that you are paying your bills on time, and if you're late on your bills, bring your bills current. If you're struggling to do so, contact your creditor and work out an agreement. Look, let's be honest, they are generally very willing to work with you and just want to get paid. The longer the lates on your credit report are in the past, the less impact they have on your credit scores. The second largest factor of your credit score is your credit utilization ratio. This is a big way of just saying how much of your available credit are you using. This has the second largest impact, up to about 30% of what your FICO rating is. For the absolute best rating, you'll want your use of credit to be 10% or less of what you have available. If you're using over 30% of your available credit, it will have a negative impact on your FICO score. The quickest way to have a boost on your credit score is to find the balance on a particular account that is closest to the maximum and pay it down to less than 50%. After that is paid down, you start with the next account that is closest to the maximum and do so again. This will have a huge effect on raising your credit score quickly. On the side here, financially, there takes a certain amount of discipline. If you can't afford it today, wait till tomorrow till you can. That's the proper sacrifice. Sometimes we need to forego today to have a better tomorrow. And this is reflected in our credit score, and that's something that creditors know. Number three, and the last factor I will review today, is checking your credit report to make sure that there are no discrepancies or errors on them. The credit reporting agents are filing and cataloging millions and millions of transactions each day, and mistakes happen. These mistakes often originate with the creditor and or data entry. One keystroke by a distracted or stressed out employee can have a huge impact on your overall credit profile. So it is best to go over your credit history with a mortgage professional like me to make sure that all the information on the report is accurate and up to date. If there are mistakes, which 1 out of 5 reports contains, the person that is assisting you with your loan can help you get the issues sorted out and corrected. So let's recap. The 3 largest factors in your credit score are timely payments to your creditors, your credit utilization ratio, and the negative reporting, which often contains errors in them. I hope you've enjoyed this video. And if you are considering a mortgage and want to make sure that your credit is up to speed, please contact me. I will be happy to serve you. My screen contact information is on your computer. Next week, we will continue our conversation on credit with talking about trade lines and what you need to have established with your credit before you apply for a mortgage. Until next week, this is Ed Merriman, your Maryland mortgage man, wishing you the best. See you soon.